amidst the rising tension bordering on policy instruments, of course, instrument choices, the Monetary Policy Committee of the Central Bank of Nigeria held its September meeting retaining all its policy rates, that's 11.5% for the interest rate, as well as other key parameters that includes the cash reserve ratio, the liquidity ratio, and the asymmetric corridor. Before the meeting, hopes were high on the decision of the MPC, as the Naira has been on the race to new lows over the past week, threatening the bank's core mandate to maintain a stable value of the currency. The CBN had, at the last meeting, imposed a ban on the BDCs, leading to significant fall of the Naira at this last meeting. CBN again vowed to shut down the operations of Aboki FX over its posting of exchange rates. It's obvious that the CBN seems to be after the illegal activities at the foreign exchange market. But what effect does this have on the performance of the Naira and the signal it sends, I beg your pardon, to investors? Well, I won't be doing this alone. I will be joined by the senior lecturer at the Department of Economics, Nnamdi Azikwe University, Dr. Christopher Kalu. Good afternoon, Dr. Kalu.
Cholo, good afternoon.
Yes, first, what is your reaction? What were you expecting, and what's your reaction to the committee holding up all rates? Were you expecting this, or were you expecting a shift?
First of all, I must appreciate most sincerely the CBN governor and the members of the Monetary Policy Committee, whose responsibility is to dish out the monetary policy rate, which is the anchor rate. Now, for me, I was expecting a shift, a paradigm shift from the normal 11.5% to something higher than the inflation rate, because it is not economics that say if the monetary policy rate is less than the inflation rate. The conventional thing and the principal thing is that the monetary policy rate should be higher than the inflation rate. In that way, inflation will be forced down. And if you notice very well for some time, Tolu, 11.5 has been the use rate over time. And if it has been used and the inflation still remains as high as it is today, that means ordinarily that it should be adjusted to a higher point over and above the inflation rate. And ours is quite challenging because it's operating. Inflation rate is going side by side with exchange rate. Normally, a stable exchange rate should draw out the high inflation rate, but ours is not the same. So I was expecting the Monetary Policy Committee, chaired by the Central Bank Governor, to adjust higher than the 11.5% so that inflation rate will come down a bit.
Well, I'm getting that. But there's this argument that they put up saying that a hard stance, let me read it out to you, would allow the current recovery of output growth and decline inflation. And, you know, if you look at all of this, considering the fundamentals in the economy, do you think that holding on this way is not better than tightening or loosening this rate?
I think it's not going to be better, because we should also remember that the core mandate of the central bank is inflation, price stability, and exchange rate flexibility. But the trend in the global economy now has made it compulsory that the apex banks or central banks all over the world include growth promotion. So that notwithstanding, but I'm still saying that price stability vis-a-vis inflation control and exchange rate stability is the core mandate of the central bank. And that is true to type. Now, because the policy they have been pursuing is that of growth promotion instead of paying more attention to inflation control. So I am not of the view that growth is not necessary. Growth is necessary, but inflation, controlling inflation is very, very much important to us now because of its effects on the economy, especially the household. And if you check well, it has a ripple effect on the households. It has a ripple effect on the household. So the central bank they're trying because the global economy is not favorable enough, and therefore is also affecting Nigeria. But that notwithstanding, inflation targeting, inflation control should be our major focus. Inflation control and stabilizing the exchange rate should be our major focus now than trying to promote growth or outgrowth.
Let's now look at other issues, global issues, and not even global, it's also domestic, talking about vaccinations, and there's even a shortfall at the moment, talking about African countries. And all of this will one way or the other affect growth projections. We've seen IMF come up with figures, Nigerian government coming up with figures, even the central bank coming up with figures, saying we might grow at about 3% the last quarter of 2021. What does this mean to you? How does this growth projections, how do they come to you considering vaccination and the third wave of COVID-19?
Well, if already at the second quarter of this year, the growth profile was 5%. Now, plus or minus, if there are good stimuli, if the government can inject good stimuli in terms of investment, in terms of increase in productivity, the growth projection will not decline. Rather, it will maintain its standard. Even if it doesn't go down completely, it will still maintain 5%. But in the case of what is going on now, and there is no urgent attention put to the economy vis-a-vis productivity, the growth profile will surely come down a bit, according to the projections of IMF and the World Bank.
Let's now look at the big elephant in the cupboard, which is something we must talk about. That's the FX space and what's been happening with regards to efforts by the Apex Bank to stabilize this market. We see the Naira taking serious bashing in the past weeks, and it's not looking good at all. That you should also agree with me. But the central bank is saying that the commercial banks should continue what they're doing and continue to monitor any sharp practice across the entire value chain, talking about the Forex value chain. Now, do you think that there will be light at the end of the tunnel, talking about our Forex market with all of these moves?
I don't think so. Sorry for saying this, though I'm not trying to sound like a prophet of doom. I don't think so, because even at that end, even at the commercial bank end, the regulation, the accessibility of dollars is not there. Now, a situation where you walk into a bank, a deposit money bank, to buy dollars, they will tell you that they don't have it. Now, what we expect you to do, they will tell you to go to the black market. And at some point in time, like 2 days ago, I was hearing that there's going to be a hammer on illegal exchange rate markets. But how do you buy the dollars if the commercial banks that are supposed to give you the money doesn't make it available? So for me, and at the rate things are going now, I'm seeing the dollars going higher and higher, because it seems that it's a loose increase of the maintenance and regulation of the dollars against the Naira place.
Let's talk diversification, which is some way people think that we can generate revenue. Of course, even FX. If you look at the cocoa, palm oil, cashew markets, and all of this, how well are we also taking advantage of this, considering the fact that we also have all of this included in the economic sustainability plan? But are we really getting enough support from the non-oil space?
Yeah, government is doing all its best. That will give them that kudos. They are trying all their best, but that best is not well manifested in the economy, in the sense that we are still depending so much on oil and the revenue that is coming in from oil, at the neglect of other sectors. For example, the service sector has not been fully utilized. The tourism sector has not been fully utilized. So where is our comparative advantage if these services, the tourism sector and the other allied sectors are not fully utilized? Because we are depending so much on oil. So I am thinking that unless government diversify its attentions, policy attentions from oil to promote really, in real nature, the other sectors of the economy, the diversification may not be feasible. It may not be feasible for us.
Dr. Kalu, let's look at some of the interventions by the Central Bank of Nigeria in recent times. This was part of the resolutions also at the NPC meeting. You know, Apex Bank coming to say what's been done in the agricultural space and the pharmaceutical space, trying to promote local production. We've seen what's been happening also around that area. MSMEs has also been key. We've seen a lot of investment, fundings, and all of that moving into that space. Impact is what I'm looking at. What do you make of the impact?
Very great, very great, very great, very great, because the long-run effect of those interventions, monetary policy interventions, will go a long way to promote the domestic economy. And at this point in time, I would like the federal government to augment effectively the monetary actions of the central bank. And in that way, the potentials will be achieved. But if at the end of the day, the central bank alone is left to do this without the enforcement, without the legal backend of the federal government, the objectives will not be achieved. Because both the monetary sector and the fiscal sector must coordinate well to achieve the final goals of the economy. So government should come up to support the central bank in all these interventions, so as to move the SMEs, which is the engine of growth of the economy, to a greater height.
When we talk infrastructure, in that resolution or in that speech, there was also talks around the infraco, which many think that that will come to the aid of, well, of course, government and of course the people to bridge infrastructure gap. What do you think of infraco and how we're going about it?
Yeah, I think it is in the right direction. Infraco is in the right direction if only the available funds will be made. Now, the capital base of that organization is not easy to come about, but I know that government has a lot of options. Government has a lot of options to raise the required revenue to kickstart Infraco. And why is it necessary? Infrastructure is very, very necessary. Because if the infrastructure is available, every other aspect of the economy will kickstart. So government will do the needful by making available the required funding. And if you look at the amount that is needed, it's not easy. But I think government should strive, going beyond borders now, to raise such to support Infraco taking place.
Now, finally, we've seen a projection, growth projection that Nigeria will grow at 3%. We've seen all the realities on ground. What do you make of it, and what more can be done to achieve inclusive growth as we move on? Well, in 2021 and of course beyond.
At this point in time, a prudent macroeconomic policies are required. Prudent monetary policies, prudent fiscal policies are required. And there need to be injections, capital injections, inflow injections into the economy to drive the economy. And once the economy is driven in terms of productivity, that growth projections, the growth projections will not nosedive. And if they don't nosedive, that means automatically we'll be going higher and higher in terms of those projections. Even above 3%, up to the minimum point we are now in, which is 5%. So government needs to do the needful. A lot of policy frameworks, macroeconomic policies, fiscal policies needs to be injected at this point in time, but they must be prudent enough to drive the economy.
I must thank you so much for your time. I've been speaking to Senior Lecturer, Department of Economics, Nnamdi Azikwe University, Dr. Christopher Kalu. Thank you very much for spending your afternoon with us.
I appreciate it. Thank you so much.